Hey everybody, thanks for joining us. I'm Bill Birch.
I'm Morgan Birch.
And we are a father-daughter team trying to climb our way up the real estate ladder
one rung at a time.
And today we actually do some stuff at 9 on the Hudson here in Jersey, and we were talking to Henry Song, who we have with us tonight.
Yes.
And we were talking about investments, and there are investors that are here and are buying units here, and that kind of got us into a big conversation. We're like, oh wow, we really need to do this for our vlog.
Yes,
so that's
and
what we're doing.
especially with Henry, because your perspective and way of articulating investors.
Henry's good at it. Henry
real
is
estate.
the community manager here and also at
And
Four
properties.
Ponds at Lincroft, and I've got 4 other communities that are in planning at the moment, and will be coming online within the next couple of years.
That's awesome.
So we're climbing the ladder one rung at a time, and he's climbing the ladder like 10 rungs at a time.
I'm doing my best.
So it's working out. So anyway, so tell us a little bit about what's going, just like a really quick
overview of
9 on the Hudson,
itself.
and then let's move into
For those who
what
haven't seen it.
investors are seeing and what's happening here and why investors are buying.
So 9 on the Hudson is the tallest building in Port Imperial. And Port Imperial is a master plan community here on the waterfront in Hudson County. 9 on the Hudson is a 13-story building, so again, we are the tallest here. We have 278 homes, all luxury condominiums. Port Imperial spans over 4 different municipalities, starting in Weehawken, then West New York, which is where we are now, North Bergen, Guttenberg. A lot of what you're seeing here started off about 20 years ago, in the late 90s, 1998, 1999, when Bulls and Jacobs Ferry first came online. We had a couple of rental buildings. And obviously it stalled out during the big sort of recession in the housing market in 2008. But recently we've seen a big resurgence. A lot of different national developers coming here and starting to build again.
Yeah,
Cool.
Very cool.
And you are. KHAV is here building and built.
KHAV has been here for a long time. So we actually were one of the first national builders that came down here in Port Imperial. We built Bulls and Jacobs Ferry, built Grandview 1, Grandview 2.
Right.
And then, Lennar came in as well. They were building, as a JV product with Roseland, they built the Hudson Club. Then they went down into Weehawken and they built 1000 Avenue, Henley on the Hudson, 1200 Avenue. So,
Okay.
Yeah.
Okay, so because just trying to keep my eye on the investor price of what they're looking for, why is this building particularly appealing to an investor?
Sure. So a number of reasons. First and foremost, it's the taxes. We have one of the best abatement programs in the state of New Jersey for new construction. It is a 20-year pilot program. First 10 years of which you're going to be paying under 1.1% of your purchase price, which is phenomenal in New Jersey.
I haven't heard of another one.
I mean, New Jersey is the highest, property tax state in the union. Traditionally it's at over 2% for real estate in the state of New Jersey. So to be at under 1.1%, it's phenomenal. Yeah.
So we get a lot of questions about cap rate from investors. They're obviously trying to make the most out of their dollar when they're asking that question. But what is your response to investors who are asking about that?
Sure. Well, cap rate, while it's a good sort of litmus test to decide whether or not you want to invest in an area, it's not the end all be all. Cap rate is great to kind of just really take a quick snapshot and look to see if it's something you want to move forward with. For A-rated areas, typically you want to look for somewhere in the 3 to 4% range. If you can get over 4%, it's considered a grand slam. Now, traditionally New York City is under 1%, and that's because values there are just so high, it's very difficult to turn a positive cap rate there.
Right.
Yeah.
So speaking of that, when it comes right down to it, the investor's looking at what's this property going to cost me, and where's it going? Because they're looking at the long play. Depending on where you're at in the country, some places are looking a lot more at cap rate. Sure. Here we're looking at that appreciation factor over time.
Absolutely.
And to add to that right now, we're in a tense market where a lot of condos, we've been seeing prices, I think right now, kind of bumping the bottom.
Sure.
But it makes it a great time to buy. So I would think that if you're an investor and you're looking for this kind of an investment property at kind of helps that a little bit because the
Yeah.
future looks.
Yes.
We are what I would consider an emerging market. And what I mean by that is, when we compare very, very well to some of the outer boroughs of New York, values in New York City obviously are extraordinarily high. I mean, to find a product that is of this caliber, with this type of amenity package, with this type of view, nearly impossible to find in New York City. I mean, for a 2-bedroom unit that we would be looking at 1.2 to 1.3 million would be 8, 9, 10 million in New York City. And so, there you see a value play first and foremost. But if you look at and compare us to some of the outer boroughs and compare us to something like a Brooklyn or Long Island City, we still stack up very, very favorably in comparison to those types of areas and communities as well. And that is really where you're going to find that long play capital appreciation that you're talking about. And that's really what I think is the biggest value in an area like Port Imperial, because we are an 8-minute commute by ferry ride to New York City, to Midtown Manhattan.
Right. If you could, the people that are watching right now, you can't see it, but if you could look over our shoulder, if you just follow us on Instagram or check us out on Facebook, you'll see some of our 9 on the Hudson pictures, and it's just right there. There's nothing between us and New York City, and that ferry ride is nothing.
It is. It's
short.
It's a short walk. There's a shuttle that'll pick you up right in front of the building and take you over there in 2 minutes. You could walk to the ferry in 4 minutes. And the ferry ride is literally 7 or 8 minutes over into Midtown Manhattan. And the commute to Hudson Yards from here, it is literally the shortest commute to Hudson Yards outside of New York City. So it really is phenomenal. And to talk a little bit more about Hudson Yards, and I know you're probably curious about that.
This is what I'm really excited about. This is why I was like, we have to sit down, because I know that there are so many New York brokers and New York investors who do not realize, which is why this is great, because it's kind of a secret, but it's incredible. Okay, so sorry.
So as far as Hudson Yards is concerned, and the way that we look at it is that the Hudson Yards effect, that we call it, has not really sort of presented itself quite yet. Hudson Yards, we feel like has not hit critical mass quite yet. So the retail and the commercial parts of it, the occupancy rates haven't really hit critical mass. And I think that happens within the next 1.5 to 2 years, and that's when we're gonna start seeing, 90 to 95% occupancy in those areas. Once you hit that critical mass, there's going to be an enormous demand on housing in Port Imperial. It just hasn't happened quite yet. So there's your upside. That's really where the upside is going to happen.
Because there's so many headquarters going up there. That all those employees are going to be. They all need somewhere to live, and even if it's before the critical mass is hit, many of the employees don't make as much as the C-suite people.
Of course.
So they want a really nice apartment that they can entertain in and have friends be jealous of them in. And 8 minutes away by ferry, it's like...
The residential component of Hudson Yards is extraordinarily expensive, just as you were saying, Morgan. It's like, to get a 1-bedroom or a studio, condo in Hudson Yards, you're looking at, on the lower floors, $2,500 per square foot, and then reaching or approaching about $8,000 a square foot as you go up the building. And here, we're at a blended average across the entire building, here at about $900 a square foot.
But there are some units here that are below 7, right?
Absolutely, and that's the blend. So we have units that'll be at closer to $1,200 a square foot if we consider it to be like a AAA rated view, top of the building, full panoramic skyline. And then we will be down at under $700 a square foot for something that doesn't have a view, or maybe a partial view of New York City.
It just feels like a steal, because if you're going to buy it and hold it for at least a few years, you have virtual guarantee of demand.
Absolutely.
And is there a cap on supply? Is the FAR?
Yeah, so absolutely is. There's definitely FAR restrictions here in Port Imperial. There's also height restrictions all throughout Port Imperial. So for example, the building that's in front of us, it can't go higher than 80 feet. And the way that the building is designed, there's 2 towers on either side. There's an open section in the middle, and they can't go above 45 feet on the middle section, preserving the viewpoints for our homes in the interior courtyard.
Right.
So, yep.
And FAR means floor area ratio, meaning that there's a limit to how much residential space can be built.
Exactly right. Exactly.
So that means supply is virtually guaranteed to go up, and demand, reverse. So demand is virtually guaranteed to go up, and supply is capped. So that's like the dream as an investor for whatever you're investing in. It's all supply and demand.
Right, and that's I want to throw something in here so I can like go back out to a larger scale. Manhattan has seen basically an overbuilding of new construction condo units, which has really pressed them. New Jersey's seen what I consider to be an overbuilding of rental-only buildings.
Rental, exactly.
Those rental-only buildings have temporarily pulled tenants out of the person that owned the condo. They moved out. They wanted to rent it rather than sell it. They rode the wave up. Now they have a vacancy and they're struggling to find that tenant because the tenant's going to the rental-only building that's built specifically for their demographic. So now that's flooded the market with those condos that are for sale now because those absentee owners are saying, hey, I can't find a tenant. I'm going to sell it. So now we've got all this inventory in Manhattan. We've got this inventory here. Manhattan's got it has a whole host of other problems that they're having to deal with right now. If you watch the news, they've got problems. So we have this temporary push, and I noticed that 9 on the Hudson has been very aggressive in pricing, very aggressive when talking to people. If they've got somebody that's interested, they want to have a serious conversation.
Absolutely.
So not to be negative, I mean, I know that it's not what Kay Hovnanian would have wanted as a development, but they're also dedicated to getting these sold.
Absolutely.
So you've been very welcoming to any conversation that we can get started for a sale. I don't see the stars aligning any better for a buyer to buy something at a good price.
Sure, and just to let you know, with regards to pricing and negotiations, it doesn't do us any good to sit on inventory, and that's the reason we do it. If we've got 278 homes in this building, and we feel like in 3 years' time the market will improve and we'll get incremental increases in value and sales, the financing costs associated with carrying that much inventory just simply doesn't make sense. It makes more sense for us to sell out of the inventory as quickly as possible.
Speaking of that, 2 questions. First, how much has been sold now?
We have 94 units remaining in inventory.
So we have hardly any left.
We don't have a lot left. We're down to our last third.
Nice.
Yeah.
And as for renters, because he was just talking about renters, which I see, but if you're buying this as an investor and you're looking for a renter, the investors who have bought here, have they gotten their places occupied?
Absolutely.
At a good price?
We've had owners that have rented out their homes on the first day of listing, literally one day, where their listing will go out. That very same day, they'll have an offer for rent on their home. We've had other homes that are a little bit more expensive as far as rental values and prices are concerned with views. They take a little longer, but no longer than a month. So the rentals here are highly sought after. They move very, very quickly.
Okay, bulk buyers.
Yes.
Bulk buyers.
Yes.
Before we wrap, I really wanted to talk about that.
Okay.
Have you had any bulk buyers?
We have. We've had some bulk buyers in the building. Not more than 4 homes in a bulk purchase, but
That's a good sign.
It is.
Because typically, unless a bulk buyer knows exactly what they're doing.
right.
And they don't do a bulk buy in a building like this unless they
Absolutely.
are pretty confident.
What I found is that, when we have an investor that comes in and is buying multiple homes, they've done their research. They've seen what's happening in the area. They understand. They're following, the developers. They're following the builders. If you have an area like this where you've got multiple national builders that are coming in and buying up land at, extraordinarily inflated values now, there's a reason for it. If these parcels were trading at somewhere between $5 and $10 million 20 years ago, 10 years ago, in fact. Nowadays, these parcels trade for $35, $40 million. So you can see a huge increase in land values here. And these developers are not here to lose money. They're not coming here to try to build something just for the sake of building it. They're here to make money.
Right.
And Toll Brothers, who is a direct competitor of ours, they came in and purchased the 2 parcels out in front of us for a significant value, and they're making a play here in Port Imperial for the first time. And Lennar was here. They built a significant amount of product down here on the waterfront, did very well, and they sold their last 2 parcels to Hong Kong, which is a Chinese developer, And they paid close to 70 some odd $1 million for those 2 parcels. And
Oh,
we
wow.
thinking,
That's
yeah,
great.
Well, and there's what's left.
nothing. Nothing's
It's
left.
all-
Everything is accounted for.
Everything's accounted for and planned, I think, right?
Absolutely. Everything is planned and approved. And so
So
it's all a matter of shovels in the ground.
We're at the very end of it, and then once that gets built out,
That's it.
and we're in that sweet spot between the waterfront and the cliff.
That's right.
Just this isolated little gold strip
That's right.
right down the waterfront. So it's
Yeah.
perfect. Well, that was awesome.
Yes, thank you so much. I think we're.
It's great to have you. Anything else you want to share?
That's it.
Wait, I
No?
wanna
Thank you.
Okay.
All right. Take care.
Awesome. Hey, thanks
you for
for
joining
watching
us. Yes.
Be sure to like us, follow us, subscribe to us, do whatever we do on social
friend
media.
us.
Friend us. And check out 9 on the Hudson because it is awesome.
Yes, if you want more info, you can talk directly to your broker, or you can call 9 on the Hudson sales office. Just let them know who sent you the video.
Yeah. So we just don't hesitate though because sounds like we're about out of time.
Yes.
Awesome.
right.
Thank you.
All right. Bye. Shake and bake.
Shake and bake.